The United Kingdom is a highly developed social market economy. It is the sixth largest national economy in the world measured by nominal gross domestic product, GDP, 10th largest by purchasing power parity, PPP, and 22nd highest by nominal GDP per capita, constituting 3.1% of nominal world GDP. By PPP terms, the UK constitutes 2.3% of world GDP. But as we all know from the news, things are not going good for everyone, but UK is on the top of the list. In October 2022, UK reached its highest inflation ever since 1981, which was 11.1%. Now countries like Argentina and Venezuela, where inflation rate loves to go in triple figures, we might think for such a big economy like UK that rate should not be an issue. But the reason of this inflation actually did seriously impact the UK economy, not worst like Argentina but also not great like other European countries. So in this video we will discuss what caused UK economy to suffer. Is this temporary? What will happen if this continue like this? As we already told you, the economic dominance of UK on the world, still it is surprising to know the way this economic giant is suffering, whether it is increased electric bills, demands for increased pay. Now the reason can be from war in Ukraine, pandemic and then currency devaluation. Reasons can actually be more than this. The depreciation of the pound is one of the reasons for inflation in the UK. When the pound depreciates, it means that it becomes less valuable against other currencies. This makes it more expensive for UK businesses to import goods and services, and for UK consumers to buy imported goods and services. This data shows that the depreciation of the pound is a significant factor contributing to inflation in the UK. The depreciation of the pound is making it more expensive to import goods and services, and making UK exports less competitive. This is leading to higher prices for consumers and businesses. The UK government is trying to address inflation by raising interest rates. However, this is likely to have a negative impact on the economy, as it will make it more expensive for businesses to borrow money and invest. Then the sanctions imposed by the UK on Russia in response to the invasion of Ukraine have had a number of unintended consequences. The global price of oil has increased by over 50% since the start of the war in Ukraine. This is due to a number of factors, including the sanctions on Russia, which is a major exporter of oil, which is the reason of increased energy prices in UK. The global trade in goods has declined by around 5% since the start of the war in Ukraine. Because of these reasons, the UK economy is expected to grow by 2.5% in 2023, down from 3.7% in 2022. This is partly due to the impact of the sanctions on Russia. Inflation is having a significant impact on the UK economy. It is eroding household incomes, squeezing business margins, and dampening economic growth. Consumer price inflation in the UK was 9.9% in August 2023, its highest level in over 40 years. Food inflation in the UK was 13.6% in August 2023, the highest level since 1980. Energy inflation in the UK was 54% in August 2023, the highest level since records began. Average weekly earnings in the UK increased by 7% in the year to May 2023. However, this was below the rate of inflation, meaning that real wages fell. The economic effects on the UK are likely to be both long-term and short-term. The short-term effects of the current economic challenges facing the UK are already being felt by businesses and households. Businesses are facing higher costs and lower demand, leading to job losses and lower investment. Households are facing higher prices for food, energy, and other essential goods and services, leading to a decline in living standards. The long-term effects of the current economic challenges are less clear, but they are likely to be significant. If inflation remains high, it will erode household incomes and squeeze business margins. This could lead to a period of sustained low economic growth. In addition, the UK is facing a number of structural challenges, such as an aging population and declining productivity growth. These challenges will make it difficult for the UK economy to catch up with its peers in the long run. The UK government is taking some steps to address the current economic challenges, such as raising interest rates and providing support to households with the cost of living. However, more may need to be done if the challenges facing the UK economy persist. If the UK's problems are not solved, the country could become less attractive to foreign investment. This would further reduce the UK's economic growth prospects. Following are some specific scenarios of what could happen to the UK economy if its problems are not solved. Scenario 1, the UK economy could stagnate for a decade or more, with low growth and high unemployment. This is the most likely scenario if the UK's structural problems are not addressed. Scenario 2, the UK economy could experience a period of high inflation, followed by a recession. This scenario is likely if the Bank of England is unable to control inflation. Scenario 3, the UK economy could experience a financial crisis, similar to the one that occurred in 2008-09. This scenario is likely if the UK's government debt becomes unsustainable. The future of the UK economy is uncertain, but it is clear that the country faces a number of serious challenges. If these challenges are not solved, the UK could face a period of sustained economic decline. So conclusion is that UK economy is resilient, but it is important to remember that it has not faced challenges of this magnitude in many years. The UK government needs to take action now to address these challenges and avoid a period of sustained economic decline.